The Bank of Ghana has underscored the need for collaborative efforts to empower the underserved to boost the financial inclusion agenda. Speaking at the ongoing 3i Africa Summit, Second Deputy Governor of the Central Bank, LC Aduawazi, noted that this will help in the effectiveness of monetary policy reforms. This report has more.
The surge in financial innovations is expected to impact developing economies. These innovations are expected to improve financial inclusion and ensure the allocative efficiency of resources. Thus, a large percentage of the unbanked would have financial services access. The expanded access would also have implications for the conduct of monetary policy by central banks. This is, however, not the case in Ghana, as there is a slow pace in the adoption of financial technologies. This is, however, not the case in most countries on the continent, as there is a slow pace in the adoption of financial technologies. Speaking at the ongoing 3i Africa Summit in Accra, Second Deputy Governor of the Bank of Ghana, LC Aduawazi, highlighted the need for collaborative efforts to empower the underserved to boost the financial inclusion agenda.
Well, financial exclusion will continue to hinder effective transmission of monetary policy for as long as significant cash remains outside the banking system. So financial inclusion is important. It's important for poverty reduction, for growth, for sustainable growth, but it is also very important for policymakers to think about the effectiveness of their own policies if there is that much exclusion. Exclusion will continue to keep a large portion of businesses in the informal sector and largely outside the tax net, affecting government revenues.
Vice President Dr. Mahamudu Bawumia outlined the need for governments to take proactive steps to foster fintech innovation and ensure regulatory compliance despite the prevailing economic challenges.
The financial sector is undergoing a profound transformation, with Africa being no exception. The continent, with its growing population and increasing mobile penetration, presents a fertile ground for fintech innovation. However, alongside the opportunities lie challenges, particularly in the regulatory arena. As new technologies emerge and financial services evolve, regulators are grappling with the task of crafting regulations that present a balance between spurring innovation and ensuring consumer protection.
The high levels of inclusion in any financial space is essential to increasing the output of interest rate changes. Thus, stakeholders at the ongoing 3i Africa Summit are pushing for more policies to ensure that financial inclusion is a key requirement to the effectiveness of monetary policy in the country. For Citi Business News, my name is Nete Ajaho.